Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy found across the markets today. What I do is two specific things. I teach a course on gap trading, and within the course are two specific gap trading strategies. The first one are the morning gap trades. That happens when stocks are gapping higher or lower from the previous trading day's close. That creates an opportunity. It creates an opportunity for traders that can identify a specific price level where stocks will A, be drawn to, and B, have a price reaction from in the other direction. That's the morning gap trading strategy that's taught in the course. The second are the gap fill trades. When stocks gap higher or lower at the open, they leave what's called an open gap. And open gaps on charts, most of the time, will get filled. Whether that stock is tradable or not, at the time in which that gap is being filled is another story. In my course, I teach traders how to trade the gap fills, and I teach them how to track the gap fills. Throughout the course is everything you need to know in order to trade the gaps successfully. Whether it's the morning gaps or gap fill trades, everything you need as a trader is found in this course. The other thing I do is I offer traders that want them my gap trades each and every day. They get an email at 9 o'clock in the morning, 30 minutes before the market even opens for trading. So here's a copy of the email that went out this morning. And we had a pretty healthy laundry list of possible gap trades on the board today. And you know what? The volatility got sucked out of the market. Most of these stocks didn't hit their price level, and therefore all these tradable opportunities were taken away from us by the fact that they just couldn't get down to their levels and the volatility got sucked out of the market, except for one. We'll take a look at the chart of Athenahealth. I say gap lower, support levels are at 96.47 and a secondary level down at $90.11. Stop and profit target is about 45 to 85 cents. Let's go ahead and take a look at the chart of Athenahealth and see what happened on a short-term basis. So here's a 10-minute chart of Athenahealth, and you can see what happened. In the second candle of the day, the stock made a low of 96.83, coming up short of the 96.47 identified in the email that went out to subscribers long before the market opened. And then the stock trended higher all day long until it rolled over late in the day. And guess what happened? At 3:30 in the afternoon, the stock comes in, makes a low of $96.12 within the stop loss limitation and bounces higher. And just within 30 minutes later, making a high of $98.40, almost a $2 bounce at the end of the trading day. Now, I can't say that traders were waiting around all day at 3:30 in the afternoon to trade Athenahealth. I get that. I didn't trade it myself. I was taking a nap at 3:30 in the afternoon. However, the reason that I want to show you this is it shows you the power of these price levels. Even though it took a second try later in the day, which changes the trade altogether, and this is discussed in my course. But the point I want to make is it shows you the power of these price levels. $96.47 level, even at 3:30 in the afternoon, produced almost a $2 bounce off that level. It goes to show you the power of the levels that I teach you how to calculate in my course at LazyGapTrader.com. Come over to check out the course, folks. I can teach you everything you need to know in order to trade the gaps successfully. I'm David Frost. Thanks for tuning in, traders.